Smucker's plans on eating $5.5 billion worth of Twinkies and other Hostess treats. Let's talk business strategy. But first, a bit about the companies involved. Hostess was founded in 1919 in Missouri, originally called the Continental Baking Company. They introduced the Twinkie in 1930, combining a golden sponge cake with a creamy filling. They also made ho-hos, ding-dongs, fruit pies, and many other convenient packaged treats. But despite all the great memories and tasty treats, eventually business got tough, and Hostess went bankrupt. First in 2004 and again in 2012, causing Twinkies and other treats to disappear from grocery shelves. Fortunately, these treats came back when the company was restructured under new ownership. But now the company is changing ownership again. The Jam Smucker Company, aka Smuckers, was started in 1897 when Jerome Smucker sold apple butter from the back of a horse-drawn wagon. Jam Smucker's original apple butter was made using trees planted by the legend Johnny Appleseed himself. Smucker later added jellies, jams, ice cream toppings, and other items, and the company went public in 1959, after the death of its founder. Over the years, Smucker acquired multiple jelly and jam companies to increase its product line, reduce cost, and ultimately grow profits. Then after growing across 3 continents, they wanted to get into something more. Smuckers acquired the Adams Peanut Butter Company in 1998, Jif Peanut Butter in 2002, and later introduced Uncrustables. Side note, I think Adams may have ruined PB&J for me as a kid. I can't eat peanut butter and jelly sandwiches anymore. You can roast me in the comments or like the video if you agree. Smuckers later acquired other companies, adding Pillsbury, Hungry Jack, Crisco, Folgers, and many other products. But they sold Crisco to B&G Foods in 2020, along with flour and other baking products. Smuckers even got into pet food by acquiring Big Heart Pet Brands in 2015, adding Milk-Bone, Meow Mix, Kibbles and Bits, and Pup-Peroni to the portfolio. I guess if you plan to sell food to people who think their pets are people, you might as well feed their pets as well. So what is the deal with Smuckers and Hostess? Companies often diversify their portfolios in order to grow and add new products. Although companies could add new products by creating them from scratch, that takes a lot of time and effort. It's easier to just acquire established products from others, and Smuckers has been doing that for decades. And now Smuckers is acquiring Twinkies and everything else that Hostess has to offer. Since the start of COVID, snacks like Twinkies and Ho-Hos have grown faster than healthy snacks. Smuckers wants to cash in on that growth, so they are paying Hostess shareholders $34.25 per share, plus enough cash to pay off $1 billion worth of company debt. This is a fantastic deal for Hostess investors because the stock had been trading at around $22 per share a couple of weeks before. The agreed-on price represents a 50% premium paid to Hostess shareholders. Acquisitions are risky because acquiring companies have to pay enough of a premium to get shareholders to agree for the deal, and the deal might not pay off. Yes, shareholders get to vote on whether or not they want to accept this deal. Just think about the Smuckers attempt to buy Hostess. Anybody who had already paid or kept the stock at $22 a share a few weeks before wanted to keep it at that price. They probably would have wanted to keep it, or most of them, at $23 or $25 a share. Smuckers had to pay enough of a premium that enough shareholders would agree to the deal and accept their offer. Now, the deal isn't over yet. That shareholder vote still has to take place. But given the premium that Smuckers is paying, a majority of Hostess shareholders are likely to accept. Also, this deal isn't guaranteed to be good for Smuckers either. Acquisitions are great for those who get paid, but extremely risky for the acquiring company that now has to make money on the deal. Smuckers certainly hopes that having more products in the packaged food industry will give them more control, more revenue, and more profit. But its shareholders don't seem to be convinced of that yet. When the deal was announced, Smuckers' stock price dropped $10 per share. A lot of people sold. A JP Morgan analyst said, "We can't say we love this transaction from Smuckers' perspective. First, the price is high. We are very surprised that Smuckers, or anyone, is paying this amount." So what will happen? At this point, it looks like Smuckers may eat a lot of Twinkies. The question to be answered now is whether Hostess products will lead to an increase in Smuckers' bottom line.